some issues and some questions that people normally ask concerning their tax returns. So we will be doing this as and when we receive questions, and we believe that we should educate some people who may not be directly involved in taxation. Our next virtual tax discussion will be on managing your PAYE. And this is mostly for people who are employees. So we'll be discussing more about how we can reduce our PAYE, taking advantage of the various various reliefs that are available. If you have any question, kindly unmute and then you can speak. But then in the absence of any questions, we'll encourage you to keep your mic mute so that we don't disturb others who will be talking. So ladies and gentlemen, tonight we want to discuss tax returns. So first, we would like to talk a little bit about what at all is taxation and what is the basis for levying tax. We'll look at the constitutional requirements of filing tax returns. Then we'll look at the law, the Income Tax Act. What does it say concerning filing of tax returns? Some people think that when the employer is in charge and the employer withholds the PAYE, it is the employer's responsibility to file the tax returns. In other words, if my employer has deducted the PAYE, that should be enough. We will learn that the employer has his own responsibility and the employee also has his own. So if you fail to do and imagine the tax laws are being applied, then you are in a fix. We'll look at the penalties for not filing the tax returns. And here, let's debate whether if we really enforce this penalty, we will rather get more money than some policies like the e-levy, or we can even get it in addition to the e-levy. We will consider why tax returns is so much important, and then finally, we will start completing the forms. We'll start completing the form. So like I said, if you are not speaking, kindly mute your mic so that the background noise does not distract us. We will learn how to complete a sample form as an individual, and then we'll bring the curtains to a close. We hope that within 40 to 45 minutes, we should be able to finish this discussion. So ladies and gentlemen, let's go straight into our discussion. And many people ask, why tax? Benjamin Franklin, we remember his quote. He always say that there are two things which are certain: taxation and then death. For this, we are aware that it will eventually happen. And he said this within the context of the United States. It may not apply in our case some way, somehow, because some people really do not think that tax is something they is certain. They can avoid it. And indeed, if you look at our part of the world, many people, it is said that, especially those in the informal sector, their contribution to tax revenue is very low. So let's talk about tax. Why are we levying tax? And normally, if you study the trend around the world, tax is a compulsory contribution that everybody, each of us, people within the country, we are supposed to contribute to fund the government. And there is a single base for determining the tax, and it is normally from your wealth. Just like in a family, when there is a rich person, when there's funeral, we expect that a rich person contributes the highest. The same way taxation is implemented. We levy tax based on your wealth. So wealth is critical in levying any form of tax. Now, it is in stages. So when you create wealth, for example, you do salary worker, you increase your wealth, they pay you salary, they pay you money, then it is said that you have created wealth. So we expect that income tax will be paid when you create wealth. This fundamental principle runs through most of the tax system that we know. So creation of wealth will result in you paying income tax. If you don't create wealth, or even after creation and you want to hold your wealth in the form of property, so you don't want to spend your money you have earned from your salary, you want to buy properties, building mansions. If you hold your wealth, we expect that you pay property tax on your wealth. Some people will say, look, me, I don't want to hold the wealth. I want to sell it. I want to transfer it. So immediately you transfer your wealth to another person, it's expected that capital gain tax will be paid. So you sell it, we calculate how much gain you have made, and we expect you to pay tax on the capital gains. What about if I consume the wealth? Or possibly you don't work, and all the time they send you money from abroad, and all you do is go around spending in the shopping mall. The expectation is that if you consume your wealth, then we have to find a way of taxing you in the form of consumption tax. So you see that the tax goes around in different forms so that government can get some money, or the rationale is that you have the wealth, and therefore, if you have the wealth, then you ought to contribute the larger part of it to support government. So those are the basis of levying the tax. Let's look at the constitutional requirements, because we are talking about returns. Let's look at the constitutional requirement of tax returns. And if you read Article 41 of the 1992 Constitution, it says that the exercise and enjoyment of rights and freedom is inseparable from the performance of duties and obligations. And accordingly, it shall be the duty of every citizen. And if the Constitution says it shall be, then means that it is your duty. And if you jump to J, it said to declare his income honestly to the appropriate and lawful agencies and to satisfy all tax obligations. So there's a constitutional requirement on us to declare our income to the appropriate taxing authority. In this case, the appropriate taxing authorities will be the Ghana Revenue Authority, because they have been set up to deal with all tax matters. So you cannot talk about rights and freedom and other matters when you have not exercised your obligation, or if you have not, when you have not performed your obligation. The two are inseparable. You can't separate them. So that places some burden on us that, look, this is the Constitution even concerns itself with declaration of income to the appropriate taxing authority. The question then is, do we normally do it? If you look at the Income Tax Act, returns is also required. And Section 124 of the Income Tax Act also places that burden on us. It says, subject to Section 125, a person shall file with the Commissioner General not later than 4 months after the end of each year of assessment a return of income for the year. So at the end of the year, you are supposed to file your income tax returns 4 months after the year. And for individuals, so for individuals, employees like me and you, our year is 1st January to 31st December. So immediately after 31st December, 4 months after the year end, which is 30th April, the law requires that we should file and declare our income to the Ghana Revenue Authority. If you're a company, we use your accounting year. So if your accounting year ends on the 1st December, then the same April 30th is 4 months, then you are supposed to go and file your tax returns. There are exemptions because Section 124(1) said subject to Section 125. So let's look at the exceptions under Section 125. There are instances where returns are not required. So Section 125 of the Income Tax Act says that subject to subsection 2, a return of income for a year of assessment is not required under Section 124 from a resident individual who has no tax payable for the year under Section 1. So if you don't have any tax payable at all, or the whole of the year, the income you received was not taxable, then you are not supposed to file any tax returns. Now, I have canceled it because it's been amended, but originally it's read an individual, a resident individual, whose tax payable for a year under subsection 1 relates exclusively to income from employment, subject to withholding tax under section 114. So the idea was that if there is an employee and he has income from employment, then it is assumed that the employer will withhold and then pay the tax. So there's no need for him to come back and then file returns anymore. But this has been changed because we realize that there are some people who earn employment income and they earn other forms of income. So if we make it blanket and say that, look, the employee is earning income from employment and his employer has withheld, if he has any form of other income, he will not come and file. And so this part of the law has been cancelled and therefore it's been amended. Let's look at the amendments. This amendment came into 2016, amendment number 2 under Act 924. Now employees are required to file their tax returns. It's no more the obligation of your employer. And what does this say? It said the principal enactment is amended in section 125 by the subsection for paragraph A or subparagraph 1, subsection 1 of A. A resident individual who does not have tax payable for the year under subsection 1. So now it is limited to only persons who don't have income at all. So maybe you are a pensioner and therefore your income you receive is non-taxable. You don't pay tax at all. Under that circumstance, then we say the person is not required. But as long as you are an employee and you have paid PAYE, then the assumption is that your income was subject to tax and therefore you are supposed to file your tax returns. These are the new requirements. And so we expected that since 2016, people will begin to file their tax returns and therefore it is not the obligation of the employer. The employer has his own obligation and then you also have your obligation. So those days when the employer was filing your tax returns and therefore you were covered has changed. The employee is supposed to do his own. Some people say that, look, it is my employer's duty to do that. No, it is not your employer's duty. This one is an individual affair. It is an individual affair. So the employer has his own responsibility. If you look at section 114, employers, that's companies, the person who employed you, he has an obligation to withhold the PAYE. Section 114 says an employer shall withhold tax from the payment of an amount to be included in ascertaining the income of an employee from the employment. So that is his responsibility. That is why every month they will calculate your PAYE and then take the relevant amount and then give you the net amount transferred to your bank account. After he has done that, annually, the employer is also supposed to file a summary of all the PAYE in accordance with regulations 12 of the income tax regulation, LI 2244. And it says that an employer shall submit to the Commissioner General at the end of the year of assessment an employer's annual tax deduction schedule, which shall specify tax withheld in respect of each employee. Here, most employers don't do that, which means that they have failed to comply with the law. If you're an employer, at the end of every year, every employee who has been in your employment and you have done PAYE for him for the year, you are supposed to summarize everything in what we call the employer annual tax deduction schedule, then submit to the GRA. This is a return that is required from the employer. So clearly, the two parties, the employee and the employer, each of them has his own responsibility, and it's not the responsibility of the employer to be filing personal tax returns as it used to be before 2016. Now, I have to also say that this requirement is a self-assessment thing. So section 126 says that the return that we want you to file is a self-assessment. You must assess yourself. So it's not somebody who is going to do it for you. The question then is, what are the penalties for not doing this? But in some countries, filing of tax returns is so critical. If you look at the United States, when they wanted to share the COVID package, the 1.3 trillion, $1.9 trillion COVID package that we heard of in the news, the sharing was based on the most recent tax returns. But in Ghana, we're not too, interested in that. So we don't insist on filing of tax returns. But the law makes provision for a penalty. If you fail to file, then what is the penalty? Section 71 and subsection 1 of the Revenue Administration Act says a person who fails to file a tax return as required by a tax law is liable to pay a penalty of 500 currency points. 500 currency points is 500 cedis. And a further penalty of 10 currency points, which is 10 cedis, for each day that the default continues or each day that the failure continues. So if you have not filed your returns, that means that after 30th April, we can go back and check when you were employed. Then we start calculating. If you fail 500 for the first time, then every day that you fail to file, or every day that the returns is outstanding, you are supposed to pay 10 cedis. And trust me, and I believe that if we go by this provision, and the GRA is saying that we have potential taxpayers of, let's say, 15 million cedis. 15 million taxpayers. So 500 times 15 million is about 7.5 billion Ghana cedis. Think about controller and accountant general workers. Everybody, clearly this will give us a lot of money. And for me, I think 7.5 billion is even more than the e-levy. And then 10 cedis every day. So if for 3 or 4 years or 5 years, you have not filed your returns, can we go back and check, and GRA start enforcing this one and say, look, you failed to file your returns, and therefore this is how much you owe. With this one, I believe that even if the police come in, you have breached a law, and therefore if the police arrest you, it is more factual than any other tax policy that we may have. The question is, can I have an extension, especially for 2022? 2021 has ended, and so we need to file the tax returns. Can you file, assuming that you are unable to file on 30th April, can you apply for extension? Yes. Section 30 of the Revenue Administration Act says that a person who is required to file a tax return under a tax law may apply, you have to write, for an extension of time to file. And the extension, the application must be in writing. You have to state the reason why you cannot file within the time. And you have to do it before the due dates for filing the return. So if it is April and you are supposed to file, then maybe from now you have to start thinking about it and then apply to the Commissioner General. And the Commissioner General has the power to extend it. And 5 says that the Commissioner General may grant multiple extensions, but the extension shall not in total exceed 60 days. So the maximum time he can extend it for you, whether a company or an individual, will be 60 days. So after 60 days, you are supposed to submit your tax returns. Can that be prosecuted? The question is yes, you can be prosecuted for not filing your tax returns. And let's look at section 70. Section 73, subsection 4, it says where a person fails to submit a tax return for four months after the imposition of the penalty for non-submission, the Commissioner General may, in addition to the penalty imposed, prosecute the person to compel the person to submit the tax return. So you can be dragged to court and then you will be compelled. In Ghana, we haven't really enforced this provision, and I believe that with the setup of the new court, government will start prosecuting people for failure to comply with the tax law. Again, if we start doing this, there are some cheap forms of money that we can easily get rather than some other forms which, you know, can create a lot of trouble. In other jurisdictions, people have been prosecuted. Let's look at in the United Kingdom, a painter and a decorator failed to submit his tax returns for 3 years. And the tax authorities imposed a daily penalty at £35. Every day he was supposed to pay £35. He appealed on the ground that the penalty was too much. But when the matter went to court, the issue was whether the daily penalty was too much. And the court said, look, it is appropriate because you have failed to submit your tax returns. And failure to pay the penalty means that he was going to jail for that. This is in the United Kingdom. Again, another case in the UK, this was in 2011. The company had only one employee, and he resigned during the year. So because he resigned during the year, the company forgot to file his tax returns, and the tax authorities imposed a penalty on him. So £100 per month for 4 months, just 4 months. He appealed, and his appeal was dismissed in court. This was a company and only one employee. So GRA, if they really want to enforce the provisions we just read, yes, they can. You cannot normally talk about failure to file tax returns without talking about interest for not paying the appropriate tax. Sometimes we fail to file the returns and there are some taxes which are due, but it is not paid. What is the interest? The notion is that taxes due are debt owed to the government. And if you fail to pay it, government stands to lose money. So there is interest for failing to pay the tax. So Section 71 of the Revenue Administration Act says a person who fails to pay tax by the due date on which the tax is payable is liable to pay interest for each month or part of the month for which the outstanding relates. And the interest is calculated 125% of the statutory rate. So now that the statutory rate or the base rate has gone to 17%, we find 125% of that, and then we compound it monthly. So you can see that when you are owing, you are going to pay so much. Why tax returns at all? Why is it important? First of all, it's a constitutional requirement. So you need to comply with Article 41. That says that you ought to declare your income honestly to the appropriate taxing authorities, in this case, GRA. Now, the second reason is that the document is so important to the GRA because it is the only source of information that can provide them about your income that you have received and whether the taxes have been paid correctly. You don't want to suffer the penalty, so you should try as much as possible to file your tax returns. And in some cases, and for me, the most important, you may need tax clearance certificate to do something in one way or the other. The question is, do I need tax clearance certificate? Yes, you may need it. Some cases, if you need a tax clearance certificate to do something, the requirement is that you have to apply to the Commissioner General, and you have to satisfy the Commissioner General that you have no outstanding taxes, there are no outstanding returns and other obligations under the tax law, and you have satisfied everything that the Commissioner General may determine. So if the Commissioner General says that you have not filed your tax returns, he cannot prepare the tax clearance certificate for you, whether you are an individual or a business. And there are instances where you will need a tax clearance certificate. Anything you are doing with Ghana Revenue Authority, for example, if you are importing goods in commercial quantities, you require a tax clearance certificate, or you pay 1% of the value. If you have a tax clearance certificate, that 1% is avoided. If you are applying for a license to produce excisable goods, you need a tax clearance certificate to do that. Now, if you want to register your land, you need, for example, you want to do land title registration. The Land Commission requires that you produce your land, your tax clearance certificate, indicating that you have paid your taxes and you have been cleared. For those who require government ministries and agencies for contracts, if you are doing anything with any of them and you want business from them, it's a requirement that you should get a tax clearance certificate. And for those professional bodies who require to renew their license and also be in good standing, the law requires that you should produce a tax clearance certificate certifying that you have complied with the tax law. What about if you want to go to Parliament? It's one of the requirements. So members of Parliament are supposed to show that they have paid all their taxes or they have made satisfactory arrangements to the GRA that their taxes are going to be paid. So you can't even file your nomination forms when you don't have a tax clearance certificate. So ladies and gentlemen, let's look at, like I said, it's going to be a short discussion. We'll go into how to fill the forms. And in filling the forms, I'm expecting that you may ask some questions and then we can proceed from there. So before we proceed, I don't know if anybody has a question and will want to ask before we go into the filling of the forms. The forms, you may be familiar already. All we need is your pay slip. Like I said, we are talking about employees here, individuals. So all you need is your pay slip, and you put your pay slip together, and then we can fill the form. So at this point, we'll take 5 minutes, and then on the information that we have provided, kindly raise your hand, and then we can address the issues before we go and fill the form so that you don't lose your thought. Otherwise, okay, Samuel Osei, you have a question.
Yeah, thank you, Timur, for the presentation. I just want to find out if your company is an exempt company. What I mean is that if it is a trust or a credit union or mutual fund and you don't pay taxes, are you supposed to file tax at the end of the year. Thank you.
Okay, so the question, is it in relating to the company itself or the employee who has been employed?
The company itself. The company itself.
Section 125 very well. You realize that the exception there is only for individuals. So there is this argument that says that, look, even companies, whether you are supposed to pay tax or not, you are supposed to file your tax returns. Let me go back to section 125 again. And you will notice that after reading it, you are convinced that it is only individuals. The exception under 125 is only individuals. And let me read it for your understanding. Section 125. It says, the principal, okay, return of income not required. Subject to subsection 2, a return of income for a year of assessment is not required under sub 124 from an individual who does not have tax payable for the year under subsection 1. It didn't say a company, and a company is different from an individual. So, okay, literally speaking, companies, whether you are supposed to pay tax or not, you're supposed to file. And again, the reason is that whether it's a trust or not, a trust may be engaged in other taxable activities. For example, if a trust is engaged in selling of something or doing some business or disposing of some property, it is different from the trust, and therefore it may result in taxation of, it may result in a taxable activity, and therefore you are supposed to file your tax returns. So read section 125 of the Act, and you notice that it's only individuals who are excluded. And even without exclusion, the law continues to say that in spite of this exclusion, you may voluntarily submit your tax returns if you so wish.
Okay, so meaning if I withhold, by law, I don't pay tax, but if I withhold taxes from maybe from my purchases, I need to file tax, or I need to file my tax at the end of the year, right?
Sure, you are right. So if you are doing withholding tax, it means that on a monthly basis, you are supposed to file your monthly withholding taxes. That one day, you don't have you don't have an issue. But at the end of the year too, you are supposed to do your annual tax returns as well.
Okay, thank you.
Any other question? Otherwise, we're going to see how the tax returns is completed. Okay, so let's go to see how the tax return is completed. Normally, you have to fill this returns form, and this return form is very important. Okay, and normally it is the employee deduction form, the annual. If you go to the GRA, they may give you one, but mostly you can use Excel to design it so that you can capture the relevant portions that you want. I mean, typing it is also easy. So here you normally have the name of the employee. So let's say John or Kofi Nkrabia. So I type it there. Then your grade or your rank, GRA wants to know. So maybe marketing manager or marketing director. Then you type in there. Then your address, maybe PO Box 35, Osu, you fill it. You are supposed to provide the name of your employer. So maybe you say Living Bitters Limited. Then you are done. Then provide the address of the company. So you type in the address. These forms are available. You can get them at the GR. You can also download them. And if you want them to, we can also share with you. And you fill it. Maybe PO Box number 3, Road. Then you are done. You are supposed to provide your social security. Okay, you're supposed to provide your social security. That is the employee. For us to know that you are entitled to social security deduction. You're supposed to provide your TIN. In this case, you can use your Ghana card. So assuming the Ghana card A, so and so, then you put it there. You understand? Some employees cannot sign, so we expect that they can thumbprint or others. You are supposed to state the year of assessment in which you are dealing with. So 2021, because 2021 just ended, and April coming, April 31st, you are supposed to, file your returns. Now, it's expected that you maybe were employed in January. So January, you are supposed to state all your salaries that you received. That's why I said that all you need is just your pay slip. Some payroll systems also have this form, the annual deduction form, built into it. So you go to your HR and they can just print it for you. In that case, you don't worry yourself to do this. In other words, it's a summary of all your basic salaries and then the allowances and everything. But granted that they didn't even have it, but then you can type it. So January, maybe you receive 14,000. And let's assume that as for you, your salary doesn't change. Or January to March is 14,000. And then from April going, it jumps to 16,000. You are supposed to populate everything like that up to December. Then some people, their allowances are consolidated. So we have cash allowance, whatever allowance, there may be plenty, but you can bring all of them together. And then let's say the total is, let's say 12,000. So every month you put all your allowances together, all your cash allowances, and here we mean cash allowances. You put it together. Then you may have some benefits in kind. Let's assume that you are provided with transportation under the law. If you are provided with, let's say, fuel coupon, and you are using your own car, then maybe the law says that we should add 250 cedis to it. This is purely HR matter, and they will deal with it. You have housing allowance or other allowance. You have to put all of these things together. Then you come and get your gross emolument. This will be shown on your pay slip. So literally, you are not supposed to do anything serious about it unless your HR self has issues with running of the payroll. HR will normally deduct your 5.5% SSF. If there are other deductions like personal reliefs or mortgage release or whatever, they will factor it in there. Then the tax as calculated by HR will show here. So you are only populating month-on-month stuff. This one, you are expected to produce it to the GRE. So you say, I certify that the entries made above are correct, blah, 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 and Ghana revenue. Then your employer will sign and stamp it. Then we know that this is what the employer has withheld and has been paid on your behalf. So assuming that the employer has done this, you can submit this one together with the tax returns. Okay, you can submit this one with the tax returns, and this is the real return that you are supposed to submit. And this one is online. You can get it from the GRA website. So here you are supposed to take the office in which you are. Maybe you are STO. Let me say I'm in Tamale. So I'll say Tamale. Then I'll put it there. The year of assessment will be 2021 because 2021 just ended. Sammy, your hand is still up, or is the old hand?
The old one, please.
Okay. So I put the year of assessment here. Then if I was employed maybe 1st January, I would say January 1st. And maybe I'm doing it up to 31st December. So 31st December, then I'm done. I put my name there, Kofi, and maybe Nkrabia. I'm supposed to put my 10 here. Now here, the boxes that has been put here and the one that you are going to download from the website, your Ghana card number is more than this. So normally you can put your Ghana card in this box. So maybe GHA, blah, 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 like that. But if you have your 10 too, you can put your 10 there. Normally ours start from P000. Then you fill this box, then you are done. You put your social security here. So maybe your social security is A1, like that. This is your social security number. Then you indicate whether you're a Ghanaian or you are a foreigner, like that. We have a place for business information because it's expected that individuals sometimes also do business. So provide information about your business. If your income is solely for employment, then please don't fill this form. But if you have a business and you are supposed to pay the tax, then you are supposed to fill the business information as well. So I'm assuming that nobody has business income. So I'll say business, postal address, not applicable. Business name, I'll say not applicable. But if it's applicable, you need to put it there. If it's applicable and then you are supposed to fill it, tell us about the nature of your activity. Maybe you are into distribution of fruit juice. You have to state it. If your business is using I mean, you're a business, so certainly you'll be doing more of accounting records like that. So here you need to also tell us which accounting records you keep, whether cash accounting or accrual accounting. This is a business term. Whether your rent is rented or it is owned, you need to take, and then you tell us. You provide us with a telephone number and everything with a business thing. We'll ask you whether you are on holidays. If your business is on holidays, you can take yes. If it is, you take no. Business holiday, and you know, one of the incentives is that if you are under 35 years, the first your income from business, you don't pay tax for the next 5 years. So maybe yes, I'm on tax holiday because I am into IT or so and so. Then you have to provide the nature of your business holidays for GRA. The next box talks about, do you have a tax consultant? If you have a tax consultant, you will take and then provide information about the tax consultant. If you don't have it, you take no. Then you move on. Now, since you have indicated that you have a business, you need to give us information about your financial statement. So we have the business information, and you are supposed to tell us everything about the business. So what is your current assets? What's your accounts payable? Here you are picking it from your financial statement that you have prepared as a sole proprietor. Okay, this one is not for company, because if you're a company, this is not the type of returns you are going to file. You are not going to file personal income tax. It's a company one. Now, so a sole proprietor, you have to fill all these forms. So you have stocks, you have receivable, your bank balance, your prepayment. You give us literally everything in your sole proprietor's financial statement: your land, your buildings, your furniture, your total asset. Your balance sheet must balance. Then you come to the income statement. Tell us about your operating profits. If you are an employee, this one will not be applicable. So I will normally put 000 there. Okay. But granted that you have a business and you are supposed to do, the law is saying that we have to add your employment income, your business income, then your investment income. So you come and derive your business profit and everything here. I want to jump this one because I'm assuming that the topic for discussion is mostly about individuals. So business income will not come in here. Now you come and give us your employment information. And here we expect you to bring the totals that you have populated on this Excel. So here, based on this information, your total basic salary is 564. So you come here and then you put it 564. The allowances that you have populated there, you bring it here. Let's assume that the allowance is 230. Are there any other cash allowances? You may say no. Did you receive any bonus? Bonus has its own rules, and HR will tell you how the bonus is calculated. So HR might have factored in all the bonus calculations. Maybe you didn't receive any bonus. Now, did you receive any other benefits in kind? Like, were you provided with rent? If you were provided with rent, HR will calculate it on your payroll. Now, the reason why we are doing this is that normally HR will not do this thing for you because it is not their responsibility. So you are supposed to pick your returns, your pay slip, and fill this form yourself and then submit it to the GRA. So you are finished with everything, and your total employment income is, let's say, 600,000. This is your employment income. Now you come to your investment income. Did you receive some director's fees? Did you receive some commissions? Did you receive some annuities? Did you receive some rent income as an individual? You receive any other thing that you receive which is taxable and it is in the nature of investment, it has to come here. So you list them all. If you didn't receive any of them, just put 00000 there. You come and get your total investment income. Now we are going to add your total investment income with the business income. And then we now come in. So your total income will be your business income, investment income, then your employment income. We put everything together. Then we get your total. We are now coming to calculate the tax computation. Because business income is calculated differently. We expect that you bring your net profits. We do some add backs regarding depreciation, allowable deductions, and all those things. In other words, we adjust the business income. I'm assuming that there's no business income. So over here, I'll jump straight to the accessible income and say my accessible income is only from employment. Then, since I have my accessible income, let's say it's 600,000, because that is all I got from employment. All other ones, non-applicable. the law requires that I am entitled to some reliefs. In fact, the first one is still remain on the form, though it is no more granted. Life assurance used to be under the old law, it's no more there. But let's assume that you have social security, you have to deduct it because it must be taken from your accessible income. Marriage relief, child education relief, all of these things, if you applied for it, you have to deduct it. One major relief, which is so big and it can bring down your taxable income, is mortgage interest. If you have paid mortgage interest, you can also deduct it from it. Then you get your chargeable income. Then you apply the tax rates. When you apply the tax rates, you come and get your tax payable. That now is the tax that has been charged. Over here too is just a accumulation of what the HR has done. So at the end of the day, the payment on account is the one that the HR has deducted and paid on your account. So let's assume that if you take 1,000, HR has paid this one on your account. And all you have to do is you just fill it and then submit it to the GRA. So 50,000, you may not have tax credits because Ghana hardly do we have tax credit. You may not have a prior tax credits for the year. So everything sums up, you come and get your total payment, and then you can determine whether you have overpaid or you have underpaid. The completion of the form is very simple. When you've finished, then you go to your declaration. So I, Kofi Mensah, then you declare. If you cannot sign, then you template, then you put the date there. Voila, you are done. Then you submit this one together with this form to the GRA. But sometimes I rather go ahead and even tell the GRA, because there are certain things that my employer might not consider. For example, if you look at this form, it says that if you have disability, maybe my employer might not have included it in my payroll. So my employer was taxing me more. Cost of training, there are reliefs available to me. And maybe even pensions, I'm doing my voluntary pension contribution somewhere. Or I have a mortgage that my employer did not. So my employer taxed me more. So at the end of the day, my employer has calculated more. But when I deduct these things all from my own return, it will end up into a tax credit or a tax payable. Then in that case, I need to go and pay the difference, or I can claim a credit from the GRA. Ladies and gentlemen, that is how the forms are completed. Simple two forms, the annual deductions, and the main one is your annual returns. You complete it, you print it, sign it nicely, then you can submit it to the GRA. Then voila, you have finished and satisfied your obligations under the law. Nobody can slap you with penalties or interest. So that is all for now. I've tried, and I think that I've gone beyond the 45 minutes a little bit, or maybe within time. So the floor is open for questions. Anybody who wants this form, we can email and then we can forward it to you. And I believe that you'll be able to fill your own forms and then you won't have any issue with it. So let's move into question mode. And I can see Albert's hand up. So Mr. Ayubi.
Yeah, good evening, Francis.
Good evening.
Well, quick question. So when you file your return, is it cumulative or is it with respect to the period that you filled for? Because some of us have been in default all this while.
So what it means is that you need to do it separately. So you have to do, if you are doing 2021, you have to do 2021, finish it, sign it off. You go to and do 2019, finish it, sign it off. 2018, finish it and sign it off, and then submit each of them separately. You cannot accumulate it. You cannot put it together. Each of them, we have year of assessment for each one of them. So just that you submit multiple returns for the period. The question is whether the GRA will say you have submitted your returns late, and therefore you should come and pay the penalty that we spoke about. But you have to submit them individually.
All right, thank you.
Okay, any other question? Okay, Godfred, your hand is up.
So, Francis, good evening.
Evening.
So what happens if you've not done this before? Is it that you have to go back to when you were employed up to now? What do you have to do?
So the good thing is that the GRA has not been enforcing it. So I would suggest that we don't know where the tax regime is going now. It's possible that they may decide to enforce it this year. So I would suggest that if you can't do anything at all, do that one for this year, 2021, which is due by April 30th, 2022. When you file it, you are likely to go scot-free. If they decide to go back, then it means that trouble, you have failed to comply with the law, and ignorance of the law is not an excuse. But the worst case is that 2021 is due by the end of this month. So if you can, do 2021 and then you'll be free. If you want to contest for parliament and therefore you are supposed to file at least the last 3 years, then I will suggest that before you submit your nomination forms, try as much as possible to submit 2019, 2020, and then 2021. Then you have your 3 years.
Okay, thank you very much. Another question: is it done by the individuals or your employer will have to do it for you?
So the obligation is on the individual. The employer has his own. The employer will do his own. That is, he will do this annual summary. But the requirement is that it is by yourself. If your employer chooses to do for you, then you thank your stars. But it's not the responsibility of the employer. It is your responsibility. Even if the employer is doing it for you, he may not be sure your other source of income. So if I go and take nil, and later you go and do something, and the GRA comes to find out that, oh, Godfrey, you receive some director's fees, and on the form you take 0. What am I going to say? That is why we expect that the individual does it, the individual will sign. But your employer can do it for you anyway. For example, in most of the expatriates that companies have, they do it for their their expatriate employees, executives, your directors, your managing director. As an accountant, you do not expect your managing director to be doing this for yourself. So you must do it. And if your managing director is going to look for tax compliance certificate for something, the GRA will expect that you do it. Yeah, he has filed his tax returns. So it's advisable that your senior managers, especially the accountants, your senior managers and your top executives, you do it for them. And then you go and show to them that, Chief, this is your tax returns I'm going to file for you. Check and see if everything is fine. And if possible, let him sign.
Thank you. Thank you very much.
Sammy, your hand is still up.
So what is the process if it happens that an employee changes job in the middle of the year?
Good. If you change job, still you are going to put your pay slip together. So maybe I work from January to March in company A. Then April to December, I also have that one. So I can file it as one, or you can even break it down. The annual deduction forms, you can break it down, but you have to file one returns. So for this is the annual deduction form I'm talking about. So you can fill one, because this one you need to put the employer's name. You can fill one for company A, fill another one for company B. But this one you have to, because on this form, it is a summary of the salaries that you are bringing here. We are not interested in you breaking it down. Just give us your basic salary from the 2 companies for the year, and that will be it.
Thank you very much.
Any other question, clarification, any further question? Sammy, I'm not sure whether you can hear us, but I can see your hand up. Okay, Joe, is your hand up?
Yes, my hand is up.
Okay.
My question is simple. I pasted this seminar. I posted this your flyer on the page, and a friend asked me, what are the specific benefits you get in Ghana for filing your tax returns? Because he's outside and he knows there's stringent enforcement on filing tax returns, and he's asking in Ghana, what are some of the benefits you get for filing your tax returns?
Okay, so I think the benefit, we stated it during our presentation, and we said that apart from you avoiding the penalty, you will need to show that you have filed your tax returns when you need tax compliance certificates. And you never know when you are going to need a tax compliance certificate. The third issue is that you are complying with your constitution. It's a constitutional requirement. And if you file your tax return, the GR is able to know what information is about you regarding your taxes. So it's a requirement. Failure to file your tax returns can result in even prosecution. Just like they have in outside Ghana. The only problem is that in Ghana, we don't normally enforce this. And even if we enforce it, we limit it to the companies. It is clearly in the law, but we don't. We don't know whether the government will now be serious about it and say, look, all controller and accountant general, anybody who does not file the tax returns, we are going to take 500 cedis on day one, and then 10 cedis each day, the default continues. If we do this, if you like, let's do this. You see that we even get more money for GRA. I saw some hands up. I saw Lizzie. I don't know whether you still want to ask question.
Hello, good evening. Thanks, Francis. This is Lizzie.
Okay.
Mine is a question and comment, but the question have been asked or answered. My comment is, I think it's a good program. The 45 minutes has been worth it. So we expect more of such so that to give us reminders on what to do as citizens. I know for the first time, it will be difficult for some of us. So please we'll get in touch when we get stuck somewhere so that we can do the right thing. Thank you.
Thank you, Lizzie, for your comments. And our next event will come out. That one is managing your PAYE and your taxes in general. Over there, we're going to discuss how we can use some tactics to reduce our tax liability. I believe we'll invite you accordingly. Any other question? I saw Florence up, Duff. I saw her hand up earlier. I don't know whether you still want to ask a question. Any further question?
Okay.
Yeah,
sorry.
Joe.
Yes. So, is there a way to electronically file this without having to go to their office, or you personally have to physically go there?
Good question, Joe.
The spirit of digitization, Baumia.
Good question, Joe. The digital filing was started before, then it was stopped. For some reason, the ITAP was introduced in 2019, 2020, but for some reason it was stopped. And the understanding we are getting is that the GRA is about to bring it back by July. So let's hope, because these things can be done online. And if you do it online, it's easier. For now, individual personal income tax, you can't file it. It's only businesses who can do this online. So we hope that very soon, companies have gone online, so individuals will also go online. Thanks. I can see iPhone. So iPhone, let's hear you. There's an iPhone that has raised it. But Godfred, do you still have a question?
Yeah, no, Francis, I joined late. So would you share this? I'm seeing some, would you share this material with those of us who might be interested?
Yes, we'll share the link with you so that you can get it. Okay.
All right.
Okay, iPhone, your hand is still up. So if you can speak, kindly unmute and talk.
No, I think iPhone has typed this question there.
And he said what? Okay.
The question was, it says, Francis, is it possible to share your presentation?
Yes, we'll share the link with you so that you can view it. Yes, we'll do that. Okay, so we started exactly 6:10 and it's 2 minutes to 7:10. So ladies and gentlemen, we hope that you will join our next session, which is on managing your PAYE. Others will come like withholding tax. And mostly that one is going to be on businesses, withholding tax, relevant questions and answers. Some say that the withholding tax should be abolished because it more or less forces people to pay tax which is not due. That the implementation is problematic. The rates, if you compare the way foreigners are taxed, it really destroys the base, especially if your foreigner says that he is not going to, bear the tax and you need to gross up. So at the end of the day, everything is bazaar. We'll also be talking about the VAT flat rates. People are saying the way it is built now is problematic. So we will invite you, when we invite you and you have time, within the 1 hour time, kindly join us and let's discuss. So on behalf of the Center for Tax Policy, I would say, we thank you very much for joining us to share your issues with us. And we believe that We will continue to discuss matters concerning tax and also share ideas as we move along, either doing business or employees. And our next session, which is on managing PAYE, you will also find about 60 minutes to join us to discuss and ask your relevant questions. Thank you very much, and we hope to see you soon. If you need some information, the email address is provided. Kindly write it and then share information, any question that you want, africa.taxpolicy@gmail.com. Drop us a short email and then we can respond to that for you and we'll make progress. Let me say thank you very much for joining us.
Thank you.